Do you wish that all things wealth and finance were much easier to understand and not presented by a bunch of beige cardigan-wearing geeks? Welcome to the Clever Investor Podcast, where we're dishing up the easiest to understand finance program served in bite-sized chunks, so your brain will thank you as your knowledge grows. Hosted by the brilliant Owen Taylor, a multiple award-winning expert with a glorious knack for explaining the complex world of wealth in the simplest of ways.
Hey, clever investors, and welcome to another show. Well, tax time is always a fun time, and while us property investors are often quite happy with the potential tax credits that we can get, it sometimes can become a little bit of a horror show for the poor old accountants who are doing all of the work for us in the background, and we do nothing but increase their workload. So today I want to take you through and discuss some essential tips on how to stay on the very good side of our Australian Tax Office and avoid any potential penalties. We're told in the 2023 financial year that the ATO is taking a closer look at rental property owners who might be incorrectly reporting on their taxes. Now, according to their estimates, 9 out of 10 landlords are either under-reporting their income or over-claiming deductions, resulting in a quite staggering $1.3 billion in lost tax revenue on an annual basis. Now, we had a previous show all about what taxes are and where they came around. Maybe you want to look back and have a look at that one. It's a cracker of a show. So to address this issue, the ATO has been working with lenders and property managers across the nation, and they've been cross-referencing data to ensure that the tax returns are accurate and what they've actually been claiming and looking at is lining up with the particular circumstances. So, what are the key areas they have been focusing on? Well, firstly, they're keeping an eye on investors using investment property loans or the funds from loans, maybe when there's a refinance happening, for personal expenses. Now, these are things like buying vehicles and maybe paying for the kids' school fees out of money that's ideally, well, it's not ideally, it's just meant to be used for the business purposes of having their investment property. Secondly, they want to ensure that repair costs, which can be offset against rental income, aren't incorrectly being claimed as capital works expenses. There's a whole show coming up soon about what capital works costs actually are. And thirdly, they're going to be checking for the expenses being claimed are not for private use. Now, these are in the circumstances of around where people have got an investment property and maybe it's being Airbnb'd and you're staying in it or they're staying in it themselves, but they're still putting it through as if it has actually been rented out to a member of the public and claiming any of the sort of running costs during that period. And that comes under the heading of personal use, can't be claimed against the property then.
Now, it's time for a little word from today's podcast sponsor.
Blue Wealth Property is inviting all Clever Investor podcast listeners to attend the exclusive property showcase on the 15th of August at 7 p.m. Sydney time. This is a Zoom event. Clients who attend get first access to the best investment opportunities in the land. To book yourself into any of the Blue Wealth Property education events, go to bluewealth.com.au and look for the events tab and book yourself and your friends and your family in now. To avoid running foul of our friends at the ATO, here's a few critical tips that landlords can use when we're doing our tax returns. Number one is keep meticulous records of all rental property income and expenses. Using a shoebox is not going to work anymore, folks. You probably need to update yourself and get something that's easy for your accountant to use as well. So have a conversation with your accountant about what tips that they can offer, what maybe software you can use. Number two, understanding the distinction between repair costs and capital works expenses. Now, I have started putting together a show which will be coming up in the next few weeks about what the big major differences are between repair costs and capital works expenses on investment properties. So there will be more, and we will have got a whole show elaborating on exactly what these things are. Number three, only claim deductions for the days when your property is genuinely being used for generating rental income. So again, this goes back especially to those of us that may have Airbnb properties or holiday rental properties. If you're using it yourself, then it's not generating rental income. Any of the expenses around that, you really shouldn't be claiming for them as well. Number four, when in doubt about a deduction, seek professional advice. This is what your accountant is for. And if you're still not quite sure, then get it in writing from them about what you can and cannot be doing. If they're not prepared to put it into writing, well, there's the hint. Probably not a good idea to be doing it. Just a reminder that failure to comply with the ATO's requirements could lead to penalties of up to 75% of the tax shortfall, something none of us want to actually be dealing with. Keep it in mind that the ATO may request evidence to support any of the claims that you're making. So you do need to keep receipts, you do need to keep those invoices, and a lot of this is probably going to show up on your bank statements, and especially if you've got somebody managing the property for you, the real estate agent. In the case of an audit, and I guess what I was taught years ago is don't wonder when you are going to be audited, just know that it's going to happen at some stage and prepare yourself for that from the very beginning. You're going to have to show all evidence related to any claims that you're making. So make life easier for yourself and just be diligent with keeping all of these documents. By being diligent and adhering to these guidelines, you are going to ensure your tax returns are accurate and you're going to be better equipped to avoid any potential penalties. I hope you've enjoyed today's podcast. If you've enjoyed it, hit the like button. Tell your friends and family all about this. Maybe write us a review. We'd really appreciate it. And I'll see you again next week for another edition of the Clever Investor Podcast.
You have been listening to the Clever Investor Podcast, proudly sponsored this week by Blue Wealth Property. Are you ready to start a new investment journey? Get in touch with the industry leaders, Blue Wealth Property. Blue Wealth have a proven track record in using research to identify growth markets, and Blue Wealth have supported thousands of Australians to buy the right property in the right market at the right time. Go to bluewealth.com.au.